Well, it's that time of year when we start thinking about our New Year's resolutions. Joining me live now is Aware Super Group Executive Sarah Foreman to help us improve our financial fitness in the new year. Sarah, I appreciate your time today. Can I ask for your top tips, please, for 2023?
Certainly. Look, we have a great team of financial advisors at Aware Super, so we gathered a bunch of them together and said, what do you think are the top tips for Aussies facing into the next financial year, given we've had levels of uncertainty? And we're really conscious that so many Australians, when they think about resolutions, think about their health and wellbeing, and we wanted to nudge them to think a little bit about their financial fitness. So I guess for us, the first place to start is really think about whether you've got a household budget. And if you don't, think about it quite methodically, go through all your sources of income, but also then really think about all the sources of expense that you have, from the essential ones, the utilities, the food for the family, insurances, to all of those other expenses, the things that we love, and really work through what are your options. I think next to that is really thinking about goals. You've probably got some short-term goals, holidays, paying off a new car versus longer-term ones. And that could include starting to think a little bit about your super. And I think for us, Aussies of all ages could start to think about their super, whether it's as simple as having a look at where your super is going, how that's invested, what the options are for you, and probably getting a little bit more comfortable with what your risk comfort levels are in markets that have been going up and down quite a lot lately and will do over the long term, and think about how long is your timeline to retirement, and is now a time to possibly think about making some additional super contributions if it's going to put you in a better place in the long term. That's probably a couple of them. There's probably a few more we could touch on.
Well, we'll touch on super more in a second, but before that, just how important is it not to only stick to our resolutions, but I guess also a budget in this economic environment?
Yeah. Oh, look, I think we're on a 28-year high on insurance levels at the moment. We've had 8 consecutive interest rate rises. There's levels of uncertainty out there around our financial circumstance. And so having a budget is really, we believe, just the cornerstone to getting a bit more comfortable about and confident about your financial situation, and really starting to think about what can I influence and what can I control. I want to feel a sense of control. So that's probably the nudge we're giving, which is just start to have a think about, your family budgets, and as a real foundation of comfort around your financial management.
Increasing interest rates are a huge concern for many. Most people's biggest expense is, of course, mortgage repayments. Is there any hacks or advice you can offer here? How can people save?
Yeah, look, I think you often hear the banks advertise and lenders advertise for new customers, and I think it's always important to check that you're getting the most competitive rates out there at the moment. So do have a look at what you're paying. Again, make sure you're really informed around the arrangements and agreements you've got with your lender, and have a look and see if there's some better options out there, because there may be, and now may be the time to either present those to your current lender and they might be prepared to match them, or it could be the time to shop around and make a move. And I will just make one other comment on interest rates. The interest rates on debt are often higher on some of those short-term loans that we take, like buy now, pay later arrangements, credit cards. So I think if there is any extra cash, it's really the time to try and reduce some of that, short-term debt that you are getting charged a higher interest rate on.
Yeah, that's such a valid point. In terms of strengthening your super fund, you touched on it a little bit before. Is there anything you can suggest?
Look, so many of the funds, like I'm at Aware Super, and funds like ours will offer you free financial advice at no extra charge. If it's about, how's your super invested, explaining some of the basics to you, what sort of contribution levels could you be making to get to a longer term retirement goal that you may have. So certainly reach out to your fund. And also the banks have a lot of general information available through webinars and podcasts and all sorts of things to allow you just to become a little bit more educated in an area that can be complex and confusing for so many Australians. So I'd start by saying, just engage a little bit and understand where your super's going and how it's invested. The first step of an advice process, and as I say, many of the funds, like Aware Super, will offer you a simple advice service at no extra fee. Start with working out with you what your risk tolerance is. can you sleep at night when you see your super balance or other investments bouncing around a little bit in markets that are volatile because of a whole range of world events going on? Or will you only feel comfortable if you're invested in something that's a little bit more secure, but over the long term possibly won't have the same growth potential, but it sits more comfortably with you? And that's the conversation that you can start to have with a financial planner, to explore where your risk tolerance is and make really informed decisions around how your super's invested. If there is extra cash, you can make additional contributions to your super as a tax-effective way of saving. You can't access it until retirement in many instances, but it is a far more tax-effective way of saving than sometimes saving outside the super system.
Some great advice. Sarah Foreman, thank you for joining us today. I appreciate your time.
Thank you very much. Have a great day.